If you've been keeping up with global news, guys, we're going to make this one quick. But the US dollar has dropped 4% in the last less than a month. 4% in the last month. So let me explain to you guys what that means. What when it says when it dropped. The US dollar typically trades against other currencies, the pound, the euro, the yen, which isn't doing great, but it trades against other currencies. But the US dollar as the global reserve currency means one very important thing. It means that other countries, when they're interacting with each other, they pay in dollars. If I am China and I'm buying something from Nicaragua, right? They have the Chinese yen, and Nicaragua has the pesos, whatever. They're paying in dollars. Why does this help the U.S.? Well, it helps the U.S. because both countries have to buy dollars now to interact with each other. And why do people use the dollar? Because it's been seen as the most stable currency in the world over the last several decades. People love stability. U.S. isn't going anywhere. They're paying their debts. This dollar isn't subject to imagine. Like you see all these like crazy revolutions. We have protests here in the country. Yes, we do. Other countries have coups and revolutions. Governments topple. Hyperinflation. We haven't experienced that, at least not since the Civil War. I mean, now we've had depressions, we've had recessions, but for the most part, the dollar has maintained a stable asset. But what happens when there's uncertainty? Well, people aren't buying the dollar as much. They buy other alternative resources. They buy gold, silver to hold. Wait a minute. So the price of gold and silver has absolutely skyrocketed this year. Absolutely skyrocketed. Almost doubled, I think, in some cases. More than the dollar has. So if people aren't investing in buying the dollar, they're buying gold and silver, well, that takes a hit. But and then what else has happened? Well, all the issues with geopolitics this year has made some countries really think, well, do we want to tie ourselves so closely with the United States economically if they're going to tariff us, if they're going to take us over in some capacity? So China, along with other countries, decided, well, why don't we just pay each other in our own currencies? We don't have to go buy dollars to pay each other. We don't have to trade our currencies and buy treasury bonds to do business amongst each other. So the demand for dollars dropped further because the stability is not there. The relationship is not there. Lastly, what's really driving this also is these countries, and granted, the U.S. has been carrying a lot of these countries. They have these countries in Europe and in Asia and all around the world, Africa, have not been doing a good job in maintaining autonomous markets and ecosystems. They all depend on the United States of America. All of them. They all depend on the U.S. taxpayer. But we also depend on them. It's not a one-way street, folks. We can't say we're all high and mighty. We use our dollars to buy stuff, and we buy a lot of it. We buy, look, what's on my desk? This trinket here. I bought this. I don't even need it. I thought I needed it. It was the wrong piece. But it was more of a headache for me to return it to me just keep it here. Consumerism, people. I can't tell you how many of these bad boys I got. It's a measuring tape, 25-footer. Boom. Bought it. Probably made in China or Peru, Vietnam, something. Paid in dollars. When you don't consume stuff, other countries don't get your dollars. When we overconsume, they get more and more dollars. When we make it harder to buy from those countries, then our dollar value to them starts declining. It's a paradox of, do we send more money abroad, but that means that we're buying more stuff abroad, making their dependency on our money greater. But who wins there? Rich cats in Wall Street who have a lot of dollar reserves. Who loses? Well, the factory worker that would have made this trinket here because it's cheaper to buy it overseas. The The ultimate nail in the coffin was when, well, I can't even say nail in the coffin. The dollar's still here, people. I'm not an alarmist, all right? But it's taken a hit. Gold price skyrocketed, so people are buying more gold. People are now trading in other reserves and currencies. And the pension funds for other countries, like, what is it? Who did I see? It was in Amsterdam. So Denmark, they were trying to take their little sovereign piece of slice of Greenland away. They decided, well, instead of buying treasury bonds with our pension funds money, with our teacher, like, we're not going to buy U.S. treasury bonds. We're going to invest in our own country. Whoa. So now we're seeing less bonds being bought. All of this means that the dollar is slowly and steadily declining. What does that mean for you? How does this affect you? Well, there's a couple things. I saw that we have a new Fed chair being named here in a bit. Let me I forgot his name. Well, at least they're going to be voting on him. I think his name is Kevin something. I forgot his new Fed chair. But whatever. Look Kevin Warsh. I think that's how you pronounce it. He's a Trump guy. He loves to reduce interest rates. So Trump wants interest rates reduced. What does that mean? It means that borrowing dollars is going to be cheaper here in a bit. So what does that all mean for you? What does that mean for the weakening dollar? It means, in my opinion, that you stockpile as much as you can. You just save your money, but save it. Stop consuming so much. Stop buying so much, because your money overseas is not as valuable. Things are getting more expensive. Save your money and get ready to invest heavily, probably by the end of the year, because the interest rates are going to be lower, expectedly. Borrowing money is going to be cheaper, and you're going to be able to now take advantage of this dip. People are selling off. But mid-year, I'm not even talking about end of the year. That's a really far out projection. But mid-year, here in the next 2, 3, 4 months, you should be looking at some investments, whether that's in the ETFs, real estate, possibly if you're going to go with long-term mortgages. There are going to be some opportunities to really buy the dips. That's what I think is going to really drive some of the investment cycles this year, the lower interest rates. Now, why is that really important? Because also, just instead of just a last tangent here, when companies notice that interest rates are lower, when banks realize interest rates are lower, guess what? They don't invest in lending as much money to people. They start buying up assets other places, because they say, okay, I could only get 2% investing to this guy because the interest rates are at 2, 3, 4%. Maybe lower than 4%. Why don't I go make something somewhere else? So it opens the pool, really. It's a complicated web of interest and derivatives, but it opens the opportunity and ability for you to invest. And I expect that by June, we're going to see some amazing market corrections starting to take place. Now, instead of waiting for June to get your business off the ground, why don't you start it now? How can you invest right now to make money? I want you to be rich. I want you to be happy, but I want you to be rich and happy. If you could be rich and happy, that'll make me happy. How can I help you get rich? Whatever that might mean for you. It's not just money. It's purpose. If you have a purpose that I can help you find, I'll do it. If you have a purpose that you love and you want to reach other people with that purpose, let me help you do that. And if you can make money off that purpose, then we call it a business.